And I think the other sort of, big thing that transpired during 2023 is US tech, right? And again, we talk about being active, you want to be active. Interesting, like US large cap tech was actually something you really kind of wanted to buy and hold, right? Throughout the year. Now, interestingly enough, right, as we're highlighting here on this chart, despite the fact that it did very, very well during the year, and despite the fact that garners, of course, a lot of the conversations and headlines, if we look at, the US kind of active opportunity set, right, or, whether we're looking at growth or core, doesn't, number one, seem like a lot of froth, and number two, it's not even that overowned. And so how are we thinking about that space today, given the fact that we know that it worked very well, but also at the same time, it doesn't seem like everybody else has piled in either?
Yeah, this is the fascinating part, because not only is under-owned, but it's also under-earning. So if you go back just over 2 years ago, we were very concerned about tech.
Right.
And 2022, we entered 2022, the year we entered, extremely underweight tech. And even last year, we were pretty concerned about it. But as you know, we pride ourselves now, the Fed has bought the same from being data dependent. So we are also data dependent, and data had begun to turn.
Right.
So it's fascinating to see there's almost no frothiness in tech.
Right.
Not only folks are underweight in a meaningful manner, by the way, long only as well as long short world,
right,
but also there are hardly any IPOs, which is another indication. So we feel this space is actually ripe because there are a bunch of new trends which should accelerate growth again. That's the last thing we would have predicted 2.5 years ago, but here we are.